Hello everyone, today I will be talking about Tesla, the name that has graced many headlines for its innovative technology, or the fact that it has made massive gains for investors across the past few years, and especially so this year compared to other stocks or even other asset classes. So something exciting is happening for Tesla soon, as it will officially be included in the Standard & Poor's 500 index just prior to the opening of trading on 21st December 2020. This inclusion of Tesla in the S&P 500 index is good news for Tesla supporters because this means that index funds all over the world, if they track the S&P 500 index, they will be forced to sell billions worth of shares and use that cash to instead buy Tesla shares, so that their portfolios will then accurately reflect the S&P 500 index once Tesla is included in the index. So in anticipation of this inclusion, a lot of traders have been snapping up Tesla shares in order to make a gain on it once they sell it off at a higher price, either selling it to institutional funds that are forced to buy Tesla, or even other retail traders because of this whole bullish sentiment going on. So they just want to ride on it. Well, this has resulted in Tesla recording a market capitalization that surpassed the $600 billion mark just recently. Wow, such a hefty valuation. The question is, at this price tag, $600 plus per Tesla share, are Tesla shares still worth buying for investment? Well, let's check it out, shall we? First, let's look at the timeline of Tesla. Tesla Motors was founded in California in the year 2003, and in 2004, Elon Musk invested $30 million and joined Tesla as its chairman. In 2006, Tesla showcased the prototype for its first car, the all-electric Roadster. In 2008, Elon Musk became the CEO of Tesla. In 2010, Tesla went public and raised $226 million. And in 2011, Tesla showcased the prototype for its Model S, the company's first sedan. In 2012, the Model S sedan went into full-time production and Tesla launched its first supercharger charging station in California. In 2013, Tesla posted its first quarterly profit. In 2014, Tesla announced its Nevada Gigafactory, where it manufactures all the batteries for its products. In 2015, Tesla entered the solar power market, and it also announced plans for the Model 3 sedan, its first car aimed at a mass market. And in 2019, Tesla introduced the Cybertruck, an electric 6-seater pickup truck. Next, let us look at the price performance of Tesla. As of 18 December 2020, Tesla's price was at $655.9 and the market cap stood at around $621.7 billion. From Tesla's IPO on the 29th of June 2010, in which it opened on the Nasdaq exchange at $17 a share, it has since recorded a gain of about 3,818% since the IPO date, and this translates into a 10-year compound annual growth rate of 44% for an investor that has held Tesla shares since its IPO date until today. If we look at Tesla's price performance on a year-to-date basis, Tesla recorded a year-to-date gain of 683.9% since 1st of January 2020. Although the share price went down by more than 60% in a 4-week stretch from late February until end of March, it climbed up thereafter, and a steep price increase had been observed from mid-November onwards after the Standard & Poor's committee announced the decision to include Tesla in the S&P 500 index. In contrast, the S&P 500 index only gained 15.2% since the start of 2020, and if we add the dividend gains of around 2%, total gains stand at only 17.2%, very much smaller compared to Tesla's abnormal returns to investors. Now let us look at the financial performance of Tesla. Looking at their revenue, it has been growing at double-digit growth rates so far from 2016 to 2017. There was a massive growth, just like from 2017 to 2018 as well. But from 2018 to 2019, we can see that growth has reduced dramatically. And looking at the trailing 12 months results as of September 30th, 2020, revenue stands at around 28 billion US dollars. Looking back for the past few years, Tesla has not been a profitable company. However, it managed to record a 5th consecutive quarter of profitability up to the 3rd quarter of 2020, which was as of September 30th, 2020. And this includes the first 9 months of 2020, which have been affected by the COVID-19 pandemic. Looking at Tesla's 3rd quarter financial results alone, we see that revenue and net profit have both grown dramatically on a year-on-year basis, and cash balance stands at 14.5 billion US dollars. Tesla says that it has sufficient liquidity to allow it to further develop and launch its all-electric heavy-duty and pickup trucks. For its latest quarter, Tesla's automotive segment accounts for 93% of its total revenue, while energy generation and storage accounts for the remaining 7%. Now the key question that we're looking to answer is whether Tesla's valuation can be justifiable, whether it can still make good returns for investors based on its large market capitalization now. Let us compare Tesla's valuation against other players in the automotive industry. We will look at the forward price-to-earnings ratio, which is equivalent to the current market cap of a company divided by its forecasted earnings for the next 12 months. It can be seen from the table that Tesla's forward price-to-earnings ratio at about 162 times is very high. The interpretation of this means that Tesla would need to generate 162 years worth of earnings in order to cover the current cost that investors have to pay for a Tesla share now. If we look at other auto players, their price-to-earnings ratios are far below that of Tesla, with most of them recording a forward PE ratio of below 10 times. Optimism on Tesla has also driven up the share prices of other electric vehicle makers such as Nikola Corp and China's NIO Inc., Li Auto, and XPeng, which all have soared past their initial public offering prices. In order to try to justify whether Tesla can still make good returns for investors at its current valuation, I assume that I, as an investor, require an annual required rate of return of 10%. This 10% annual rate of return is close to the return that an investor can expect to get by investing in the S&P 500 index consistently over the long run. In fact, investing in the S&P 500 index carries much lower risk due to the diversification benefits that it offers, compared to investing in a single company like Tesla, which is very high risk. To compensate for the higher risk, I should probably even require a higher rate of return than 10%. But it is okay, let's be conservative and put 10% for now and see how the numbers work out. Let's assume that Tesla continues to reinvest all of its earnings and growth and does not pay out any dividends until the year 2030. Thus, the return of 10% will have to be entirely in the form of capital gains, i.e. increase in share price alone or increase in the market cap alone. In this manner, let us apply that annual required rate of return of 10% to a market cap of $600 billion in 2020. We grow that amount by 10% every year for 10 years until 2030, and it should be expected that the market cap would be $1.56 trillion by 2030. If we look at the previous slide, we saw that the forward price-to-earnings ratio of a Tesla was about 162 times. Say I assume that in the future, in 2030, the future price-to-earnings ratio would fall to 50 times, which is still very high compared to other companies. If I then take the required market cap of $1.56 trillion in 2030 and then I divide it by that assumed 50 times PE ratio, I would need Tesla to generate 31.1 billion US dollars in order to give me that 10%. If I then assume that net profit margin for Tesla will be at 10% in 2030, which is close to that of other auto players, maybe slightly on the higher end, then Tesla would still need to generate 311.2 billion US dollars by 2030 to give me 10% return annually. Will Tesla be able to hit 311 billion US dollars in sales by the year 2030? If we look at its trailing 12 months revenue as of 30th September 2020, revenue was at 28.18 billion US dollars. For that amount to grow to 311.2 billion US dollars by 2030, we will require Tesla to generate revenue at a 27% compound annual growth rate for the next 10 years. If we look at the latest annual growth rate for Tesla from 2018 to 2019, it was only 15%. Now let's compare that projected level of sales required to the global market size for luxury cars. The global market size for luxury cars stands at 550 billion US dollars as of the year 2019 according to Statista. If I assume that the global market size for luxury cars will continue to grow at a compound annual growth rate of 5% from 2019 until 2030, then the assumed industry size by the year 2030 would be $1.11 trillion. This implies that by the year 2030, Tesla would have to have an assumed market share of about 28% in order to justify its value, in order to give me that 10% required rate of return every year as an investor. Do you think that it is highly possible that Tesla will have a market share of close to 1/3 of the whole market by 2030? Do take note that Tesla's market share in 2019 was just under 4%. The automotive industry is capital intensive and highly competitive. Not only have electric vehicle players like China's NIO, which may steal away the Chinese portion of Tesla's market share, you also have traditional auto players like General Motors and Volkswagen. These have longer years of experience managing supply chains and operations and have stronger financial capabilities. And they also have themselves started venturing into the development of electric vehicles. In the face of such strong competition, do you think that Tesla would be able to continue holding on strongly to its position as the main manufacturer of electric vehicles in the long term, long enough to give investors of Tesla good returns on their investment? Overall, I think that there is more downside risk than upside potential for Tesla based on its current high valuation and also the strong competition risk. Although sentiment may be bullish in the short run due to the inclusion of Tesla in the S&P 500 index, I as an investor would probably stay away from Tesla if I'm looking at a mid to longer term time frame. These are my thoughts on Tesla. What about yours? Do feel free to leave your thoughts in the comments section below. And also don't forget to like this video and also subscribe to my YouTube channel for more content like this. And I will see you in my next video. Thank you for watching.